one of our investors, and he's a real estate agent. He's not in my market. He's down in the Hamilton market. But I've been noticing this as well too, that small landlords that own duplexes and triplexes, they're having trouble selling because the public, the buyer, doesn't want to take on these duplex, triplex type tenants right now. Maybe 4 years ago, they could buy them and they could get that equity upside because the market was moving. But now it's difficult to raise rent in Ontario, and you only have 2 units or you only have 3 units. Nobody kind of wants to take this on. Obviously, a vacant triplex is a lot better, but then the seller wants even more money because it's vacant. So even price drops is not helping. Anyways, it was just a little bit of a antidote of like what people are seeing out there in the market and why we know you have to buy 10 units and up, so to speak, just because of volume. And me and you were chatting offline right before this, these properties aren't valued at, they're only valued at what their neighbors are selling for, practically a duplex or triplex, not as much on the NOI. Whereas big multifamily, we go straight off the NOI, the net operating income. And investors are just having trouble right now liquidating in the small duplex and triplex, even though we tell them sell, invest in the REIT. They can't get their cash out right now.
Yeah.
You seeing that?
Yeah. It's interesting, man, because I think to your point, previously when the market was just steadily increasing in terms of appreciation over the last, I want to call it 6, 7 years, people who normally didn't want to be landlords and didn't understand what includes the job description of being a landlord were kind of willing to put up with the headaches because the thing is appreciating and, maybe 5% a year on a leveraged return. You put 20% down, you get the bank to loan you the remaining 80, and then that entire value goes up 5%. That's a lot of money. So they're willing to put up with the headaches for that. But now in a market where that's not happening, I think you're starting to really see that being a landlord is a pain in the ass, and it's not worth the cash flow alone that comes from the property.
Very minimal cash flow in Ontario. Usually I say you're lying to yourself in the duplex, triplex, because as soon as that fridge goes down once a year, that's eating up a lot of your profits. Even if you're making $1,000 a month, there's always going to be something that eats up that cash flow, turnover, move out, vacancies, etc. Right?
Yeah, the roof issues. There's always repairs.
All the capex.
Yeah,
and that's why it's not easy to buy a 12plex. But you got 12 tenants. You don't just have 2 tenants under one roof and one furnace.
Yeah. And like you said, the big thing is that they're valued based on the net operating income. So as long as your net operating income stays steady, the value of the building stays intact. And then what we do, which is a value add strategy, where we're buying buildings with low net operating income, get those turnovers in, renovate those units so they can command a higher market rent it out at a higher price. We've improved net operating income, which then improves the value of the building. And the beautiful thing about that is you can do that in any economic time. Even in times of recession, if you're buying a building which has the potential for you to improve the net operating income, and you do so, you've then forced appreciation and improve the value of the building, even in a tough market, even in a good market. And people always need a place to live. So that rent demand stays steady as well, as long as you're not in luxury housing or a more premium type of product, which, as you guys know, we service core workforce housing, people making between 50 to 75K a year in income. That market is severely undersupplied. Those people need a place to live. And that's why for that market, rents have not dropped. I think nationally, based on the CMHC report, the core workforce housing rents dropped 1% nationally. But if you dig deep into our specific markets in Southwestern Ontario, they've remained stable. There has been virtually no change in core workforce housing rents. So we've been in the right asset class to be in, especially when the broader real estate market has been having a tough time.
Well, and then you'll see on the CBC some kind of a landlord that has a job and he's got one condo and he's crying because the tenant's not paying the rent. Could happen in a duplex, could happen in a triplex as well too. And then therefore you'd be 50% no rent coming in, 66%, 33% no rent coming in, or 100% no rent coming in if it's a condo. And then, the articles look bad and everybody's like, oh, real estate investing is bad in Ontario. They'll also say this is not a landlord friendly province, or in America, there's landlord friendly states. And sure, you can go buy in a landlord friendly state or landlord friendly province. Ontario is not, and we were well aware of this. But where a lot of these investors are missing, and obviously it's a lot easy if you invest in the trust, into the REIT, is if we solve the difficult problems of the tenant and able to like remove the problem tenant, increase the rent, which thus increases the NOI, we access equity. Whereas a lot of these landlord friendly states and provinces, equity doesn't shoot up when you get a turnover. You just get market value of the rent right there. We're able to solve the problem, because on our investor calls, every time I'm talking to somebody, I say we take a $600 old apartment and make it up to $1,600. That $1,000 increase in rent per month is $250,000 in the appraisal. So that's one apartment. And if we can do it 4 times, 4 apartments, that's plus $1 million for the evaluation out of 4.5 cap. That's okay. We're not a friendly Ontario's not a friendly landlord province. But if you can solve those problems, and like you said, we have a value add strategy. We're not just sitting around buying properties and hoping it goes up and increasing the rent by 2.1% per the province. We're working hard every single day, and we can access equity. So the good and the bad, right? Like we have access to cash flow and equity.
It's almost as if, because it's difficult, actually, I shouldn't say almost, it literally is, because it's difficult is the reason why this opportunity exists. Like, for example, if you do go to like Ohio, where it's super landlord friendly, the existing landlord is going to take out the $600 tenant and bring it out to market rent very easily. Like, that opportunity is not going to exist. You won't find tenants paying significantly below market rent. Because it's so landlord friendly, they've been able to progress and keep up with market rent.
They would probably just want to keep the $600 tenant, because it's like not even worth their time to do the turnover.
Versus, in Ontario, you essentially get paid to solve problems and deal with the difficult situations. It's tough to figure out initially until you get your bearings and you get the right systems and processes in place and experience, like we've had for a very large number of years. But once you know what you're doing, it's worth it for us to go through the troubles and navigate the laws in Ontario in order to deliver and generate returns for our investors.
Exactly.
And I guess in other news regarding Foundation Capital Private Real Estate Trust, we have 2 acquisitions lined up for the next quarter here. So we're actively raising capital for that, guys. We're looking at a 21-unit building in Chatham, Ontario, and I believe another 20-unit building in Chatham as well. So we just had our 2% unit bonus expire, and we're looking to continue to raise in order to get those acquisitions completed.
I was going to do this one. Yeah. So obviously, Pure Sand and I wake up every single day, and we are managing $9.5 million worth of investor money, which relates to 30 million assets under management in Southwestern Ontario here in apartment buildings. And you can get invested as well too. So all those problems we talked about at the beginning of the video, you can passively invest for 15% plus targeted annual returns, 7% cash flow, and 8% plus appreciation. And like we said, we force the appreciation by always finding ways to increase the net operating income. So if you wanted to get invested in that, you can go over to Equivesto. We usually have the links, or you can find us on social media, or you can always find us. You can type up my personal YouTube channel, Jeff Weibo, and same with PV. But then we do have something else, right, PV? We were kind of teasing it right here. For those of you that want extra returns, but you don't need your cash flow throughout the month, we do have a development that we are starting right now, and there's 24 to 27%. And you see this tower right here? We're building this. It's going to be all rentals, not condos. And the best part about this, when you get into a development, you need an exit. Someone has to buy it at the end so that you can, as the investor, can get your money. Foundation Capital Private Real Estate Trust. So if I can flip back, it's not letting me flip back to the other one, is the end buyer unless the public wants to pay more for it. So you will have an exit. We're trying to build this within 4 years. And we've been doing webinars, so you guys can get on the webinar and learn all about it or send us an email. But we're going to be building between 250 to 350 apartments in London, Ontario, a very strong economic city. And it's just going to be rentals is what we know. Bread and butter, like PV said at the beginning of this video, just the rent's going to be around $1,500. It really suits somebody that makes between 50 grand and 75 grand annually. And we're building that unit for them. So we're just working backwards. We're not making luxury apartments and really hoping that they can afford it. Just the market value apartments.
Yeah, exactly. And like I said earlier in our stream today, is that the core, we're servicing the core workforce housing with this apartment building. We're building to contribute to the housing shortage that's happening in that demographic. Again, you've seen the headlines where apartments are sitting vacant, condos are sitting vacant. You got to remember those are more luxury products in nature. They command a higher rent, and those are the ones that have taken the biggest hit. However, when you look at the types of apartments which core workforce housing, that 50 to 75K a year annual in income households, they are still very much in a housing shortage. Units in that price range are getting filled up. I want to say similar units to what we're building can range anywhere between $1,800 to $2,300 a month in London, Ontario. We're going to be building these things and renting them out at $1,550 per month for the market rent ones, and then for our 10% affordable unit requirement for CMHC, those are going to be at approximately $980 per month per unit. So we've been saying this on our webinar. We anticipate there being a waiting list to get these units filled up by the time construction is complete. Again, this project is going to take 4 years. So by the time 4 years are up, $1,550 per unit as rent might look even more attractive in the marketplace than what it looks like right now. So we're very excited about this project, and because of the government grants and CMHC incentives available, pushing developers like ourselves to build purpose-built rental housing like this, we have a lucrative opportunity here for ourselves and you as the investors, but of course to contribute housing to Ontario's housing shortage.
Yeah, and this one's going to be $100,000 minimum investment to get in. But you can do 20% down right now, and then the other 80% closer to when we got shovels in the ground in 2028, 2029. So 100K commitment, but only 20% is needed right now getting into March. So March 15th is our date for that. Yep. But $100,000, you're watching this video and you don't have that. We do have the apartment building REIT, which is only a $10,000 minimum as well too. So different options for you guys, what you want. In the apartment building REIT, you can also use your TFSA, your RRSP, whereas the development is straight up cash. So some of our current investors are doing both. Some people are just doing one. Other people are doing the other one.
Yeah, it really comes down to what you're looking for as an investor. Some investors purely want the cash flow with a bit of appreciation and have that cash flow coming in now. FCPRET is a good fit for that. Some investors don't necessarily need cash flow right now. They want to grow at a higher overall return for the future. So they're happy to take 24 to 27% and have their entire net proceeds paid out at the end of the project. So if that fits your appetite, maybe the development fund is a good fit for you. And then we quite literally have investors who have invested in both. So they get that cash flow and appreciation from apartment buildings starting now. And then they can also invest in the development fund and start accruing a return, so that by the time this tower is up in the air and has contributed to the London skyline, they will be receiving their 24 to 27% compounded annual return.
Perfect. So if you guys want to invest in the private REIT, make sure you guys head over to Equivesto and make your profile and get it qualified there to make your investment. And then for the development, reach out to us, or you can reach out to us on both, and we will help guide you on what you need, or come join the webinar. We've been doing them weekly. So get on our mailing list, get on the webinars, and get in contact with us.
Yeah.
And if you guys are new on this channel, make sure you guys like and subscribe to this new channel of Foundation Capital. We're trying to put these out weekly for you guys to keep you guys posted on everything we got going on.
Yeah. And then one additional thing is, I know if you have been following our newsletters, we've been including weekly investor spotlights. So if you're an existing Foundation Capital investor, we'd love to hear from you guys, either a testimonial or how investing in foundation capital has been, what your experience has been like, then we would just love to share those stories. So please don't hesitate to reply back to our newsletter or email us directly with some feedback on your experiences.
Perfect. All right. See you guys.
All right. Amazing. See you guys. Bye.